That's right, Rochelle. When that list of commodities came out and wine appeared on that list, it was not sitting well with those in the region right here. Understandably, they are upset about what those proposed tariffs could mean. Now, I'm in Napa Valley, which is the most famous winemaking region in the United States. It has more than 500 wineries based here. It's not actually that big of an area, only about 50 by 8 kilometers, and is only responsible for about 4% of the total volume of California wines, but it produces about a third of the total value, and that means they are higher priced, which could mean more difficulties when the price gets even higher, because you've only got so much of an audience and customers that are willing to fork out that money for that high-priced item. I am here in Honig Vineyard and Winery, which is actually one of the first to actually get into the China market. And I am joined by the president, Michael Honig, and he also was the former chairman of the board of the Napa Valley Vintners Association. Michael, thank you for joining us. I want to get your reaction, but first of all, tell us about Honig Wines and how it was one of the first to actually look at the China market.
Yeah, many years ago, we had a gentleman join us at the winery who was starting to open a store in Shanghai that wanted to focus on Napa Valley wines. So we were one of the first brands that he brought in, and that was over 10 years ago. So we've had a long relationship with the Chinese market, and it's been very, very successful up to this point.
And from 10 years ago and just a little years, those years, you had to put in a lot of work to really expand in the market.
Yes, we have. We visit almost every year. My wife right now actually is just flying home from Hong Kong. She's been in Asia all week promoting the wines to those areas. And it's been a great opportunity to really grow a market from the beginning. And now we've increased our sales 10 times in that market.
And it's just a small percentage, right, that makes up of your total production, right?
Yeah, well, overall it's about 3 or 4%. But again, most wineries in the Napa Valley don't export at all. So even though it's a small percentage, we're one of the few ones that really have been successful in the Chinese market going back, as I said, over 10 years.
So when the news hit that wine was on the proposed tariff list, what was your reaction?
I thought I was in a dream. I think wine, we're such a small part of the trade, and if there's any imbalance, it's not because of California wines or Napa Valley wines. So I really had to take a double look and say, wait, they're talking about an additional increase in tariffs. We already are hit with about a 50% increase B2B in going into China. So again, another 15% really does add to the bottom line and to the cost of our product.
And you have a lot of Chinese visitors here, and they can hit you another way because they come here and they make orders to bring back to China, which
Right.
will also face an increase. Is that correct?
Exactly. They have an increase as well because they're buying and being charged on the retail price. So the wholesale is about half of what retail is. So the increase to the direct-to-consumer business is even greater because there's higher value dollars that they're having to pay the tariff on.
Going from steel and intellectual property, suddenly moving over to wine and being entangled in this web, it's hard to believe that that is, part of the whole picture.
It's crazy. I mean, I understand there's problems with intellectual property. I understand maybe steel and aluminum are big products. Multinational corporations have issues, and there's an imbalance in trade. We are a drop in the ocean. We are a small industry, mostly made up of family businesses and long-term generational brands, and to be thrown in this broad spectrum of products that are going to get penalized, it's really ridiculous. Because again, we're not going to add to the dialogue. We have no real value in terms of billions and billions of dollars of imbalance, and it's really unfortunate because here we are, a product that's perceived as some of the best wines in the world, a great industry that in Napa Valley that are making wonderful wines that compete on the world stage. We're making wonderful inroads in China, and then all of a sudden we get penalized because of our current government and their administration policies.
That's my next question. Does it feel like that it stopped the momentum that you achieved over the past decade?
I don't want to say it's stopped, but it's certainly not going to help. I mean, you've got other countries, Australia, for example. Next year, their tariffs go to 0. So I'm now going to have a 65% tariff and penalization for going into China. They're going to have 0. So if you're competing with other places in the world that make great wine, and Australia is a good example of that, we're at a complete disadvantage already, and it's even going to get worse. And to me, that's really unfortunate because, again, I think we have a lot of value. We add great interest to the Chinese market because the consumers that are buying our wine want the best. They want to buy Ferraris. They want to have Rolex watches. They want to buy wonderful clothes. Napa wines fit into that model. So we're already expensive. They're willing to pay a premium, but to have another premium on top of that, it's just going to be really unfortunate.
If the tariffs hit, what do you do differently?
Well, unfortunately, we can't really do them a lot differently. We can't lower our prices. We have a huge increase in terms of our grape prices are going up. Labor is increasing every year. Other materials are going up. So we can't really do anything other than hope that people will continue to buy our wines and that look at this from a generational perspective. It's terrible what's going on. Hopefully, the government will realize that this is not the best way. Trade wars don't benefit anyone. They'll resolve the issues that they're having with intellectual property or other products that may have an imbalance in trade, and realize that wine is not the problem. Let us do what we're doing, which is trying to grow a market at its infancy and create more goodwill for the American and Chinese relationship.
Michael Honig of Honig Wine, thank you for joining us.
Oh, thank you.
As you can see here, the reaction is a bit of a surprise as how they could get snared into this whole scenario of a trade war, not suspecting that a wine product would be a part of this. But California wines will continue to go on, and we'll continue to follow this story as to how these tariffs unfold. Back to you in the studio.